Well, all right, you guys. Merry Christmas again. This is stock number 3 for year-end trading, possibly. But I also think it's also more of an investment for longer than just January. But I think it could be a really exciting January trade, maybe slash February. And you know it already. We've talked about it a lot. It's called collective audience. And just because it's number 3 doesn't mean I'm not really excited about what could happen. I'm going to show you my amateur charting, but this is how I see it. Let's see, I got to get over here. But here, right cheer, as my dad used to say, right cheer. I see that as a descending wedge. And if you look closely right there, it broke out the other day. And to me, where I circled in yellow, way up in the middle, that's the gap. But the 50-day and the 200-day moving averages, which are so, it's only been trading briefly. This one right here is very interesting because if you take the value of, I have it here, I'll show it to you one more time. But if you take the valuation, third-party valuation, and divide it by the now expanded number of shares because of, I think, an organized effort by some people that look great, but somebody in there did it. Anyway, if you take that valuation and divide it by the shares, it comes out to right around $8. So according to this, the stock, that's odd, it says it closed at $1.24, which sounds a little low to me. But in any event, that's what the chart says here. I think if it can, it doesn't take much. I think it's already broken out of the descending wedge, and it easily, in my judgment, can go to 250, and maybe approaching 250 is difficult. But then what holds it back from getting it to 7 and then 10 and then ultimately maybe 23 in some sort of short-term move? I'll try to put that up there so you can see my theories. It is my theory, which is to say, it is all mine. Yes, Anne. Okay, we know a lot of this story, but I'm going to just come at it out of the gate of the risk, okay? The risk. And I left some of that data over there. Shoot. Well, I'll look it up while I'm talking to you. Okay, so Logic made a deal with Aubrey SPAC a little over a year ago. 13 months ago. It is my opinion that, well, it's obvious. Somebody was coordinating an attack and planning ahead for that attack. I don't want to get stuck in the negative, but I will say all you have to ask yourself, basically sort of 3 questions. Why didn't the fund or the advisor recommend raising more money? They only raised enough to pay themselves and to pay the lawyer's fees, leaving CAUD, and they knew it. And that's the story that buzzed around, I'm sure, in their circles, that the company only had $100,000 or so left. So they were going to have to come to the markets and dilute themselves. That's the strategy, for lack of better vocabulary, of the criminals. And these smiling faces, one or more of them are a criminal. Okay, by the way, this whole video is my judgment, my opinion, and it's not financial advice. Okay, second question you can ask yourself is why, when they had the best SEC attorneys, they had 100 million under management or whatever it was at Aubrey SPAC, and they had well over a year, this was the best rollout they could do? That's the second question you can ask yourself. Thirdly, as the SEC, I think, came with 74. I think my voice was going up because I'm getting worked up. I'm sorry. 74 questions and responses. Logic answered like this: Aubrey SPAC dragged their heels. Was it coincidence? I don't know. And I would say maybe there's one other thing you could ask, which I will ask. Who was it? It's just a small group. That we'll go through briefly, but that's what happened. But that's what sets up our opportunity, I believe. So here's the list. The combined company directors here, right? And I think this is the trouble right here. But the trouble also could be Aubrey SPAC. There's basically only, obviously we know that Adriana Friedman does nothing at NASDAQ. NASDAQ could care less. When companies come to NASDAQ, she's just riding on the hard work of people before her. She has no leadership skills, no talent whatsoever, and she's allowing the NASDAQ to become an embarrassment of what it used to be for capital formation, small to medium-sized companies, and slightly bigger companies. They're all being destroyed by large pools of money. U.S. funds are doing it. Why? Because they can't when you manage $8 trillion, I think that's the number, you cannot, I'll check that number, but you cannot get those returns year in, year out without cheating. It doesn't matter what schools you went to or how you dress or if you say mate and cheers and all that. So anyway, the directors currently are Brent Sun, Christopher Hart, Nadine Watt, Elizabeth DeMars, Dennis Duncan, and Peter Boards. So from that group could be someone who set this up, or it's Chardin, or it's Polar, Chardin's client, which was the hedge fund who provided the $5 million. And then there were two others, and I can't remember their names as I'm speaking to you. That's basically it. That's who did it. And my working thesis is Polar et al., the other two funds, I'll try to find their names, I wrote them down somewhere, funded Aubrey SPAC. Aubrey SPAC probably worked with them, and then Chardin also was part of it. You can't know. You can't know for sure. This needs an investigation. But what happened is, here, I'll show you the chart again. Let me show you a different chart. Just so that it's interesting. See here? All year long, that stock traded $10 to $11. And it was based on a valuation, third-party valuation. It opened, traded up to $38. Stop trading. Somebody of that group I just said to you called NASDAQ repeatedly to get it to stop trading. They didn't have to stop trading. because NASDAQ knew on another desk that the SPAC was going to be de-SPACed, but they got it to stop trading. And then when it started trading again, it gaps down, and then it's straight on down from here. And that, my friends, is how you steal $100 to $150 million out of the marketplace. And if Aubrey SPAC, somebody at Aubrey SPAC worked with Polar, worked with Shandong, and I emphasize that's in theory only because it could have been the other two funds, but they could have funded this a year ago. Then they take their money back. All of it came out. They dragged their feet all along, causing the combined group to run out of cash. Then they underfund it just to pay themselves off and the lawyers. And then they have a rollout that Keystone Cops could have come up with, and the stock collapses. I believe this was a coordinated, planned attack. And that's one of the biggest risks in this story. And I'll get that out of the way right away. I don't have the bios here of everyone else, but you have Peter Boards was appointed CEO, and I just gave you the names of the other people, and I've lost that file. But Elizabeth DeMars and DeWitt, here it is, sorry, Nadine Watt, very talented. But my guess is they didn't get where they are without being somewhat agreeable and listening to, learning from other intelligent people. I think Dennis Duncan is the CPA. He also is going to be conservative. So I think you got 3 votes on the board that are just not going to get what's going on. And that's a little bit worrisome. I could be wrong, though. I'm just telling you it's a risk. And then you've got, I think Christopher Hart is the Aubrey SPAC guy, I think. I left, anyway, you can look it up. It's in all the filings. But whoever is on the board representing Aubrey SPAC, personally, I'd say, hey, it's not you, it's me. Somebody did this to us and our shareholders. We think it could be Aubrey SPAC. It could be Chardon. We got to move on. You made your money, sayonara. And Brent, as you know, can be fiery. I think he knows what's going on. If they listen to him, great. But you've got Peter Boards, who is extremely talented. If he doesn't buy in to the fact that his stock was destroyed by criminals, then he may be susceptible to doing another deal with them. Why? Let me show you some of these guys. Let me show you some of them. Now, I want to emphasize, I'm showing you this. If it's not Polar, it was one of the other 2 hedge funds, maybe. But here's Polar. Well, let me show you Chardon first. Here's Chardon. Black and white. Well, I got to do it like this. Black and white. These guys. Stephen Urbach, Jonas Grossman, Kerry Proper, Gabola Amusa, Scott Blakeman, Shai Gerson, George Kaufman, Emily Levine. And then here's some more. Ron Glickman, Marat Omour, Alex Wheel, Caitlin Doyle, David Lederman. Look, I don't know at Chardon. I can't know for sure. It may not have been Chardon's leadership. You can look it up. But these are good-looking people, well-educated, and a guy like Peter Boards or a guy like Elizabeth DeMars, is going to interface with these people. I know that's bad English. And trust them. But someone here at Polar and the hedge funds, this is the financial company that got paid like $2.5 million. Everything is by my belief and understanding. If I'm wrong, it's not intentional. But then you have Polar Capital, same type of people. And there were some other names, but these were the top ones. Gavin Roshison, Samir Ayub, Ian Evans, Sandy Black, Bora Kim Tomlinson Kane, Nick Farron, and Mike Caitlin. Again, if you have succeeded in the business world and you've come up through that world, you're going to trust these people. You're going to trust these people. Okay, I did print out the Aubrey SPAC people from the Edgar filing. Jeffrey Tierman is the chairman of the board, 30 years of international investment experience. Jeffrey Tierman, Nima Montazeri, Christopher Hart, I think he remains on the board with, Then there's Peter Baker, Amy Wall, John Wepler, Joseph Shotland, and Nadine Watt. I submit someone in here worked with Chardon, and then worked with the hedge funds to screw everybody that was invested in this company. All right, I'm going to leave it at that because that's the negativity. The risk in this investment, the risk in investing in CAUD is that the current board will be too conservative and won't recognize where the criminals were. I don't know who it was, but it was either the financial group, Aubrey SPAC, the 2, maybe 3 hedge funds. It could be the people involved with CAUD. I can't believe that. So it's one of those 3 that did this, or more than one, and they all look good. They all drive nice cars. They all have their fingers done well and their hair coiffed, and they meet well, and they're smart. And if management of CAUD sits down with them and listens to them, there's no way out. There's no way out. I don't know who it is, though. That's the problem. So just move from all of them. The only other players in there are the lawyers that Aubrey SPAC hired. And lawyers have a peculiar way of being honest. Very peculiar way of being honest. But I leave that out. I don't think per se the attorneys would have done this. All right, so what's the opportunity? Here's the stock. I think the opportunity is a trade in January to $5 or $7.50 a share. Easily could get to $10 a share. And if it breaks through and fills the gap, you could have a trade to $20, $25 a share. Remember, there's 1.3 million maybe in the free float, 1.3 million shares. But of that, it's probably only 400, 600,000 that's in the free float. Since Aubrey SPAC and CAUD started trading, over 50 million shares have traded. I come from the camp, I don't believe that's just back and forth trading by computer. I think that's criminals selling stock they haven't located, that doesn't exist, driving the company down, the price down. So if the company needs to raise money, it's dilutive. If the company has deals to merge with other companies, the price changes, it's dilutive. These are criminals. Unfortunately, they look like the rest of us. Okay, so let's quickly go over Peter Board's bio, the new CEO. I've read it to you before. I'm not going to belabor it, but 30 years entrepreneur and etc. Everything you want, titles and all that. Managing partner of Trajectory Ventures, tremendous. Co-founder of TrueVest. He's CEO of an acquisition fund. I just want to get to this point. He is an active angel investor and entrepreneur. Boards has ranked among the top 100 most influential angel investors in the United States and social media. This guy has a Rolodex probably as good as any. I don't think I have Elizabeth's here, but Elizabeth also. Imagine her Rolodex. Okay. Let's go in the valuation quickly. How did they come up with the valuation that Aubrey SPAC paid for Datalogic? How'd they come up with that valuation? Well, here it is. It's in SEC filings. I'll read it to you. And I don't have. They had a population of comparable companies, but at an implied enterprise value multiple of 2.9 times 2023 expected revenues, the implied enterprise valuation would be approximately $209 million. That is for Datalogic. In light of the lower revenue and higher growth rate versus the 16 companies, so it had lower relative revenue but higher growth rate, we believe that DLQ should be valued at a 2023 enterprise value over revenue multiple of basically 1.7 to 2 times. This results in an enterprise valuation in the 122 million to 144 million range. Putting Datalogic, which is now, that's what collective audience for now is, Datalogic, at a reasonable discount to the comparable universe. This valuation assumes there's no further acquisitions. Datalogic, which is now collective audience, has demonstrated a recent track record of integrating 3 acquisitions into its existing business. Should they have success with further acquisitions, this valuation could be viewed as being at a substantial discount to the other companies, the 16 companies in the universe. Therefore, we believe that a pro forma equity valuation in the Datalogic range of 122 million to 144 million is, I can't read the word, defendable, it looks like. And we believe that the discounted value, 114 million pre-money, is attractive. I added it, there's some words missing, but see, here's the value right here. You're not going to see it, but it's in the filings. Okay, so Aubrey SPAC purchased Datalogic for 114 million, issuing 11,400,000 shares at $10. I'm going to try to be quicker now that I see the time, 24 minutes. This is, the sunlight goes right through. Mentor valuation, and dated December 4th, Aubrey Ventures, dear Mr. Tierman, that's the CEO. Aubrey will acquire 100% of the outstanding securities of Datalogic for a merger consideration of $114 million in the form of 11,400,000 shares of Aubrey common stock, $10 a share. All right, so they go on to say they selected 7 transactions of companies in the same industry and similar to data logic. We determined an implied enterprise value range from 48 million to 1.2 billion based on application of revenue multiples to the 2022 and 2023 forecast revenue. So that's a wide range, and obviously you go down the middle, but they had a value as high as 1.2 billion. Based on the foregoing and in reliance thereon, the Mentor Group's opinion is that the merger is fair from a financial point of view at $114 million. So I don't understand with Aubrey buying into that, with investors buying in. Why did this happen? It had to be, to me, it had to be planned. It had to be planned. Okay. I want to show you one more thing, and maybe we can end this early because well, let me show you this. Peter Boards announced that Collective Audience forms Advisor Collective, a strategic advisor community of technology, advertising, and media leaders and innovators. That's his Rolodex. That's what's really exciting about January for this company. Because remember, as bad, and I know that I was being a little negative, but as bad as all this is, that implies, to me, naked shorts, counterfeiters, and the stock's starting to trade up. There was also a quiet period. Well, now Peter, who's great, Elizabeth DeMartz, Katrina Watt, they can get to work and make things happen. And I think you might see a vision presented sometime in January. They'll start talking to their institutional and angel investors. And then this stock could snap back really quickly. Just to repeat myself, there may be well less than 500,000 shares in the real float, and there could be 20, 25, 30 million shares counterfeited that need to cover. If you believe the apologist or the credulous point of view, maybe it's only 3 million shares that need to cover, but still, it's a hell of a run. All right, so I'll read this. Collective Audience, leading innovator of audience-based performance advertising and media, has formed the Advisor Collective, a new strategic advisory community designed to advance the company's mission of transforming ad tech, martech, that's obviously advertising technology and marketing technology, and digital media industry. Collective members will include industry executives, listen to this, with decades of leadership experience across ad tech, martech, digital marketing, media, AI, data acquisition, and related technologies. Among various roles, members will provide input on Collective Audience's full stack integrated platform and marketing strategy. I just think this is really powerful. This includes guiding and assisting the company to identify and complete complementary acquisitions. They had 3 to 4 acquisitions ready to go. One could wonder, why didn't you already have that priced? What the criminals want, they drive the stock price down, so any CEO that's being acquired goes, wait a minute, we agreed that number of shares, but now the stock's down by 85%. We got to rework it. They want to, bust those trades up, cause more dilution, so that on a per share basis, any good news doesn't mean anything. And Adriana Friedman does absolutely nothing about it. Nothing. She is paid for, she's there to protect the big boys, not CEOs and not shareholders. Okay, so this includes guiding and assisting the company to identify complete complementary acquisitions. They had 3 or 4 that build upon its ecosystem of integrated technologies and audiences. Member input will also help collective audience extend its reach into key industry segments and expand its ecosystem. Quote, our new advisor collective will bring together a community of industry titans. I like that. Disruptors. I like that. And thought leaders. I like that. Who share our vision of creating a next generation advertising and media platform, stated collective audience CEO Peter Boards. Further quoting, they will function as a think tank or TED talks group to hyper collaborate on solving the issues and challenges brands and agencies face in today's highly fragmented digital ad and marketing space. From the death of the cookie to fragmentation between buyers, sellers, audiences, and walled gardens, it's over my head, all further compounded by lack of liquidity, innovation, and access to audience data. The Advisor Collective will address these issues while helping accelerate collective audiences' penetration of its large and growing markets, particularly with strategic acquisitions. This is the thing that bring together previously disparate technologies as building blocks with uniquely powerful integrations and AI capabilities. The criminals want to keep the price down, so as they merge these companies in, if they do it down at $1 or $2, it becomes warm. It just becomes warm beer. The beer tastes like, diluted water. It's not freshly out of the tap. The launch, quote, the launch of Advisor Collective demonstrates our commitment to do things differently and surround ourselves with the best and the brightest who are aligned with our core collective belief that we are stronger together rather than in our separate silos. For companies of today and tomorrow, we see the next step in the evolution from the advisory board in 1999 and the advisor network in 2010 is this kind of advisor collective. As a collective, we believe we can better affect positive change at scale. So that's the news. So let me just scan this quickly, give you some dates. Well, one other thing. The CEO, Brent Sun, bought in the open market. Bought on November 14th, 100,000 shares at $205 a share. On November 15th, 90,000 shares at $201. And it's my understanding he bought another 70,000 shares recently. Okay. I forgot to read to you. I'm so sorry. Frank Nez on franknez.com. Other news, collective audience, Frank Nez. Let's just read that. I forgot I had it. This is dated 12/25. Well, no, that's when I printed it. I don't know what the exact date on that. Just a couple days ago. A new company. This is Frank Nez at franknez.com. A new company now seems to be targeted by naked shorts. At least that's what a CEO and a former Amex vice president are alleging. Collective Audience stock has a rather steady share price since 2021. See that flat line up there? Pretty steady. Shares of the advertising company rose to more than $27 on Wednesday, October 25th, before getting halted and crashing to its current $1.20 level. Now, it's interesting that halting, that's these group of people, I don't know which ones, one or more, calling into NASDAQ saying halt it. It's price manipulation, it's distortion, and it's unfair and it's illegal. And Adriana Friedman doesn't care. CEO Brent Sun has purchased 190,000 shares of CAUD stock, but claims there seems to be a high probability of fraud at play here. Quote, NASDAQ halted trading on October 25 due to a non-qualified float below 500,000 shares. However, on November 3rd and 6th, the float was still 61,000 shares, and the price had fallen from $27 down to $5.31, down 80%. They opened it for trading then. I'm telling you, Adriana Friedman is there to protect the funds. NASDAQ did not halt the stock during that time, Sun told Frank Nez. Collective Audience's partners are now on the radar as suspects, as I described, though an official investigation is yet to be announced. One scenario states that CAUD's partners may have sold company shares at the top and began shorting the company as prices began to plunge, causing further devaluation. The second scenario sheds light on the possibility of naked shorting. The CEO has a strong concern that hedge funds may have collectively shorted the company naked after the surge on October 25th. Tony Fort, former vice president of the trading analysis division at Amex, he's retired now, reached out to Frank Nez to confirm irregularities in the trading of Collective Audience stock. Quote, over the last few years, I have closely followed the trading activity in Logic prior to and after the spin-off of DataLogic into the Aubrey SPAC. I strongly believe that at least 2/3 of the floating supply, and that float was, Brent said it on the call, I think he said 3.4 million or 3.2 million was the float. I strongly believe at least 2/3 of the floating supply is held by shareholders who have no intention of selling any of their shares until CAUD is trading at much higher prices. And I've made my phone calls. I agree with him. That conclusion would reduce the current floating supply to under 1.2 million shares. I think it's less than half of that, but still, call it 1 million shares. I believe you could have 25 million shares or more to cover. That implies a huge imbalance when they start covering. The substantial and continuous selling in CAUD appears to be the result of computerized trading based on sell-side algorithms accompanied by short selling, most likely naked, by market makers and large investors, Fort shared with Frank Nez. The computerized trading was particularly evident on December 7th. Dive, dive, dive. Pearl Harbor Day, you know that. At 10:10 a.m., the last sale in CAUD was $2.10. From 10:10 to 10:15, and remember, if these funds trade, I think it's for 15 seconds, 60% of their profit is taxed at long-term benefits. So from 10:10 to 10:15, the stock declined to 182 from 210, down 28 cents on trading volume of 113,995 shares. During that 5-minute time span, there were 576 trades. And if you're a CEO listening, you've got to understand that you're up against it. And if you trust the bankers that walk in, the lawyers that represent the hedge funds, and the hedge funds, this is going to happen to you. So what's good here? What's good here? You've got guys like Tony. You've got people like Brent, Peter, and Elizabeth, and Naomi, and others, all aware of this. So I don't think it's going to happen again. I just spent time on it because it's the only risk in this story. Otherwise, you have a $25 stock here. And I'll tell you one last thing after I finish reading this. In order for the algorithm, computerized trading, to show a profit in CAUD, which has a very small float, there would have had to be at least 4 or 5 firms utilizing that strategy. That raises the question of working in concert. CAUD is down more than 88% year to date. So here's what I think's going to happen. Now, Tony and I disagree on the magnitude of what's going on, but there's no question that fraud is occurring. All right, I'm going to just tell you, let me just see if there was something else I wanted to say. Nope. All right, I'm just going to tell you what's coming for CAUD, I believe. Peter Boards has been put on the board, and then they have a good, strong board. Brent has responsibilities at Logic and GoLogic, so it'll be interesting to see what he does or what they do about that. I wouldn't be surprised, and I don't think it would be bad, if new leadership means new leadership, but we'll see. That's speculation on my part. I think you're going to get a deck, an investor presentation. You're going to get vision coming in the first and second week of January. I think you're going to get financing from friendly investors, which this financing may include knowledgeable people at a real investment bank rather than these thieves. So that would give an alternative source of funding rather than going back to the same tainted well. I think that'll come in as enough money to keep the company. Okay, it'll keep the company through to the next milestone. Okay, so what's next that the company has to do? They have to bring in the 3 or 4 companies, which outside companies, private companies, that they were going to roll up in DataLogic, in CAUD, before this attack occurred. Now, the company has a chance. What they can do is just say, you know what, we've raised this money. We're just going to work with our excellent platform, which brought in Battle Ridge and several other exciting companies to join. I'm trying to find that piece of paper. Of course, I can't find it. as I'm talking to you. It might be right over here. Oh, here. Here it is. Look at all these companies that came in to join Data Logic. Well, they had 3 or 4 more. Battle Bridge, Push Interactive, Tamble, Fixel Israel, Fixel AI, Rebel AI. So they have experience doing it. Now, of course, when the criminals keep the price down, there's 2 objectives. One is that, and they keep the company without capital. One is they have to turn to the criminals again, the smiling faces, and they say, well, we'll issue stock. By the way, you're close to $1. Why don't you do a reverse split? These are all, if the board isn't aware of it and they don't think, the board is honest people. They don't think like criminals, but you've got to realize somebody is there to strip the money. Anyway, the option, there's 2 paths forward right now. One is just work with Data Logic. Don't raise any money. Well, you got to raise a little, but don't raise a lot, and don't merge with any companies. Data Logic on its own can get to 70 million, maybe as high as 100 million annualized revenue run rate, probably within 6 to 18 months. That's one way. The second way is to do that and bring in these 3 or 4 companies. Now, it's my advice, who cares about my advice, but I think Peter Boards and Elizabeth DeMars and the rest of the board should negotiate with those 3 or 4 companies, use all of their powers, and convince those companies to come in at, let's say, $7, $8 a share. Ignore these lower prices. But maybe it's lower than the 10 or 11. Come in, get a little bit of a discount. I don't think they can make any agreement to true it up, because if they put something like that in writing, the criminals will see it and they'll keep the stock price down, so the true up happens of additional dilution. So I think it's going to have to be a gentlewoman's agreement that if we bring these 3 or 4 companies in together, the sum of the whole is worth more than the parts, and the price of $7 or $8 is a huge discount to the $25. Because if the CEOs of those 3 or 4 companies and the board fixate on the aberration that this price represents, look at all the time it was $11. Look at the third-party valuation. This is just fraud, which NASDAQ allows, by the way. Adriana Friedman allows this. She never fights against it. There's no evidence she fights against it. So that's number one. Bring those 3 or 4 together. Talk them into doing it at $7.50, and we'll do it all together. We'll give you our word that if you don't like the results, we'll do something down the road, but you can't put it in writing because the criminals will. I use the word crime. The criminals will crime. I know I'm made fun of on space calls by someone who says that he thinks the world of me, but whatever. What do criminals do? They commit crimes. So the criminals will continue to commit crimes. Can I just say criminals crime? They will crime. So you can't disclose that. The second thing, simultaneously, if they can raise $1 or $2 or $3 million, maybe not at $7.50, but not at $2. Maybe they can raise it at, I don't know, 3 or 4 or 5. In other words, friendly investors, CEOs that have vision with Peter and Elizabeth and the rest to see the bigger picture, realize that this is all fraud. And if they raise money down here or do roll-ups down here, it's just so dilutive. It's so, you might as well open up a one of those stores in the malls that sells lampshades, or open up a uh, cutlery store, or open up a coffee shop somewhere, because you're just going to have a job. The dilution of shares will be endless. So it has to be cauterized now. And that means making some sacrifices. I think they should raise the money right here at $8.13. How about that? So anyway, I'm going to, wow, 50 minutes. I'm going to call it to a close. What I think is going to happen next, I'm looking for the chart. Here it is. In January, you might be able to buy this over the next 2 or 3 days inexpensively. But I think in January, it's breaking out. And to me, the next stop is here. None of these others matter. I think once it breaks out of this descending wedge, and I don't think it's going to really stop there, by the way, or there. I think it could go fill this gap. So I think in January, if you, let's say you could buy the stock for $1.50, $2, I think in January you could get a run to 5, 10, and 25. 5, 10, 25. It might stop at around 7, might stop around 9. And what are the reasons? The board is going to get into action. Peter Boards, Elizabeth DeMar, Naomi Watt, all of these people are going to be calling their Rolodex, telling the stories. You're going to hear the story. You're going to hear about the future revenues. It's going to be great. I think they're going to negotiate with those 3 or 4 companies, and I hope they can do what I just suggested. And I am highly confident that they're going to raise plain vanilla financing that will get them through the milestone and the revenue growth and the milestone of rolling up those companies. So I'm going to leave it at that. Again, Merry Christmas. I apologize this one went on a little long, but I really like CAUD. I don't like what happened to it, but I think it sets up for a massive snapback. Think of pulling a rubber band and phew, or Dennis the Menace with his slingshot, or David with the giant. That's what's coming. A huge catapult upward, I believe. So peace to you and peace around the world, and we'll talk to each other soon. Cheers.